Old Mutual shares increased by 3.3% to 28 Rand after the company's full-year earnings and dividend beat market consensus. Adjusted operating profit for the year was 21.9 billion Rand. Consensus was for 21.4 billion Rand. And joining us now live from London to unpack the numbers is Julian Roberts. He's the CEO of Old Mutual. Julian, thanks so much for joining us this afternoon. Well, as I say, the market's certainly impressed with the numbers that you've come through with. You've reported higher than expected profit. Run us through what exactly has been fueling growth here and how you're feeling right now moving into the next year.
Well, I think most areas of our group have performed particularly well. In South Africa, in the life businesses, we've had strong growth coming from our mass foundation business, our retail affluent business, and our corporate business. If you come to the UK, despite the turmoil in the Northern Hemisphere, the UK business has continued to grow. And then we've had the recovery from the management actions in the US. So really, right the way across the group has delivered good results.
It seems, though, that it's your exposure to Africa and emerging markets that's really gotten you excited, Julian. You've announced that you're setting aside 5 billion Rand to fund expansion in sub-Saharan Africa. You've already started progressing down that path. You've bought the life insurance unit of Nigeria's Oceanic Bank. Run us through this strategy on the continent. Is it looking more acquisitive than organic right now?
It will be a mix of both. So the businesses that we've already got in the SADC region, then it's organic growth, and those businesses have performed very well in 2012. We had a target for those businesses to produce 10% of the South African profits, and we beat that with 11%. So we want those organically to carry on growing. And then our focus is really expanding into East and West Africa. You know, we have something in Kenya, we have something in Nigeria. We want to be, over a 3 to 5 year period, we want to be in more countries. And that's why we've announced today that Old Mutual South Africa has put aside 5 billion Rand. I mean, to that you can also add the amount of money that Nedbank has ring-fenced with their option to go up to hold a 20% stake in EcoBank, and that option can be exercised between November 2013 and November 2014. So we do see both growing our own businesses that we've got there and then building the platform as well.
With that being the case, let's take a look at Nedbank. I mean, you've said before that you're in no hurry to offload Nedbank. Does that mean that the timeline is still questionable given this strategy that you're pursuing right now, or is it something that is possibly still on the table?
Well, it's as I've said for the last couple of years, it's a valuable part of our group. What we haven't done over the last couple of years has been really to look for collaboration across our businesses. And over the last 6 months, we've stepped up the gear. The businesses are working well together and taking those opportunities that come forward. Now, again, with our expansion into Africa, we're still relatively small. And, I want all of our businesses in South Africa to expand into Africa. And we think we need to, again, leverage the capabilities that we've got across those businesses as we grow forward.
Let's talk about leveraging off capabilities over in the US. I mean, you've deferred plans, of course, to float the US asset management business. You've said that the business is not ready to go public just yet. You've seen a turnaround in those operations this year. Can you offer guidance as to what we're potentially looking at when it comes to that IPO coming to the fore, Julian? Because investors have been waiting for that breakup to unlock some value.
Well, what we've needed to do is to streamline the business, first of all. There were too many loss-making asset management boutiques. And we needed to work out what we really wanted to focus on to make that investment valuable for future shareholders. And so we have, over the course of the last 15 months, we've disposed of 7 different affiliates. We've now homed in on a really core group that have good investment performance, that are growing well. And by taking out the businesses where we had been investing, you can tell the margins have gone up in USAM from around the 18% mark up to the 29% mark. So it's helped the business moving forward. Now, I actually believe the margins need to be a little bit higher to get a good value for the business. And even though we've got positive net client cash flows, so we're receiving more funds than people are taking away, it's not yet at the level that I believe it needs to be. And so we put out a target of net client cash flow between 3 and 4% of assets under management. When we start hitting those targets, as long as the markets are right, then we can look properly at the IPO. But we've still got work to do to get the business into that right shape for that to happen. So no time soon yet.